Hello, everyone. Thanks for those of you who have been dialed into the conversations that we are having. Obviously, we want to have great conversations with anybody in the franchise industry that has a point of view that could potentially help any of you that are struggling through things right now or looking for the energy to come on the other side of this and create some momentum. Today, Ryan Zink from Franchise FastLane and Paul Pickett from Wild Birds Unlimited will be joining us in a second to provide their opinions. If you are watching live on our Facebook pages, be sure to use our chat feature. So all you got to do is go in there and write a comment. If you have not opted in to share your name, it will not appear on the screen. So what I ask is that you put your brand, your name, and your question. I'll make sure that our panel gets to it. Also, if you have not joined it yet, you go to Facebook, search for Franchise Growth Mastermind. We're starting to build a community that is meant for discussions. Hopefully long term, this will be around to help facilitate some of the discussions around franchising. Clearly in the moment, it is all about how we are dealing with this crisis. So glad to have the group on this call today. Paul, I'm going to start with you. Just general feelings. How are you doing personally in business, and your thoughts on the franchise industry as a whole as we continue to figure out how to navigate this thing?
Well, thanks, Nick. Glad to be here. Appreciate it. I'm doing great personally. You know, I'm cranking away, working from home, hunkered down. You can see me in what used to be our dining room, now my office. I've never worked from home before, so that's been a challenge, but I'm working through it. I'm just telling you earlier, over the weekend, my computer at work completely crashed and burned. So went a couple of days just maneuvering around that. But we have a great, unbelievable IT team who got me back set up today. So I'm rocking and rolling, and thank heavens for web applications and emails. So I could continue to work a little, as much as possible. We're doing well. We've got a whole team in place that has been around for a long time, and so a lot of longevity at our company, but also some really new, great energy. And everyone is, for the most part, everyone is working from home, and our franchisees are continuing, those that can, to sell birdseed. So we're doing okay. We're holding our own. April is obviously a big, gigantic question for everyone in the world, and I mean, clearly our hearts and go out to everybody who's dealing with this on a more intense level, who have actually are suffering right now from the from COVID-19. So at the end of the day, while we're nervous and we have franchisees that we're managing or helping them manage through all of this, we have to take it all in perspective, and we're all in this together. I mean, we have a saying, one WBU, stronger together, and that has never been more apropos than it is right now.
Thanks for that, Paul. Ryan, same question to you, just general personal business franchise. What's going on in your world? Ryan, you're coming in on you're coming muted. You want to try that again? Nothing's coming through. What I'm going to do is I'm going to remove you from the stream. Go ahead and try re-entering it. We had your sound before, so should kick it back in. We'll wait for Ryan to come back. Charles, let me kick it to you. First question back to Paul, and then we'll get back. We'll add Ryan back in.
Yeah, you know, I mean, we were fortunate, Paul, to speak the other day about all the support you guys are providing to franchisees. And I think what makes your system so strong is that community. Today, we shifted gears a little, Paul, in terms of franchise development, what it's going to look like on the other side. What do you think? I mean, a lot of what I'm hearing is, you know, smart franchisors are going to continue to focus on that community. You guys have a strong community. Like, how have you guys done it in the past, and how are you going to focus on that as we get to the other side of COVID?
Well, I think it's it's going to be paramount in franchise development that if you want a future in franchise development and to grow your brand, you have to focus on the here and now and supporting your existing franchisees. And I mean, face it, any of us in franchise development, at some point, you've got validation is coming in, whether we make it very formal. We use FBR, Franchise Business Review, to do surveys every year. We share that. We intend to keep doing that very intensely, because how you handle this process, that the extra support, the intensity of support, the focus on franchisee unit economics and emotional support is all going to come back in the validation process in the future. So you can't stop that one little bit. And right now, that's where our main focus is. I mean, we're still getting leads. We're down in the number of requests that we're getting, but our conversion ratio, I just looked this morning, and just looking at March, of course, right now, just to get a snapshot of it, is our conversion ratio went up 8 points, if I'm not mistaken, 8 percentage points. So what it means is we're getting less inquiries, but we're getting more engaged people, and we're turning them into leads. And we're being very clear that we're not doing anything. This is not a time to make big decisions, clearly, but it is a time that many people have the time to do their evaluation, their investigation, and go through the process.
Paul, and
oh, good, Ryan's back.
Brian, your audio good?
You guys hear me all right?
Yeah, and it's like perfect timing, Ryan, because Paul mentioned something that Nick and I, in all our conversations, are seeing. And we're seeing it with good franchisors and good management teams, which we're hearing lead volume is down, but quality is up. And that's what Paul was just expressing. And again, it's not a coincidence. Good management teams, good franchisors. Connecting the dots too, we're sensing the market shifting. You may be getting better qualified prospects. And for good brands, again, no one wants opportunity out of tragedy, but there are going to be winners. And it sounds like that there's a shift happening.
Yeah, lead flow is down some, but I'm optimistic as to where it's going. And I wouldn't necessarily say that we've experienced the quality of leads being up yet, and it's only because it's too early, right? The leads that we're getting now are as qualified as any leads that we've got in the past, and we're early on in the process, so we're starting to understand, are they real buyers? Are they really looking into it, or are they just right now in this mode of we're not sure what's going on, what's going to be next, so let's use it to explore. What I will tell you is we're optimistic, and we work with a lot of consultant networks, and what I'm hearing from them is their pipelines are increasing, right? They work with lots of outplacement and other ways to get in touch with those that have recently been laid off, and they say pipelines are increasing. So we expect a big lead flow to happen here in the near future, but we also know it's going to be a little different than what it's been in the past. So in the past, there's always been quite a bit of urgency around, we're going to move you through the process. We want to know that you're a legitimate buyer. We want to know that this is a good use of everybody's time. And we're going to take a new approach. We're taking an approach called understanding with a side of urgency. So we have an absolute new perspective on understanding their personal situations. But we're also going to remember that this is a business and people need to be serious about buying a business. So there's still going to be a sense of urgency throughout the process. So what we're seeing is lead flow down for us some. We're optimistic lead flow is going to increase based on what we're hearing from our consultant partners, and we're going to take a slightly new approach to those candidates once they get into the pipeline.
So Joe Matthews is famous for this line, and I like it. It's that how many leads does it take to get a deal done, and it's one. And I think this is going to be an interesting time because lead flow and deal flow could be two terms that get redefined in this moment. We've battled through, I think all of us, in a world where it's like, get me more leads, get me more leads, get me more leads. And the reality is those aren't deals. And they're not good quality franchisees in there. That hopefully there's going to be some sort of shift that happens in the outcome of this. And it's probably going to be short term. It won't last forever. Where we start talking about deal flow and that are we getting qualified buyers into the Ryan, I love what you're saying about looking at, what is their urgency? What is their timeline? For such a long time, even a cold lead could be defined as someone that's not returned the phone call, even though a cold lead could just mean I'm not ready to buy right now. Give me a little bit more space. So I'll be curious to see on the other side of this if there's some rotation in some of the terminology that we use as an industry that might help us redefine a better process to franchising. We've talked a lot about depth of candidate. That if we as franchisors, if we're bringing in the right candidates that are sustainable, and then we looked at their operating capital as they were coming to the table, and didn't just put someone into business that could barely bring a dime to the table, and we're responsible as franchisors, that ends up paying dividends for us. And this is where you start looking at all the processes that go through franchising. You bring in good franchisees, they grow, that equals more money from royalties, more royalty from a standpoint. If you decide to exit, when you decide to exit, the valuation goes up. So it's not brain surgery how to do this right, but maybe there might be some forcing of this on the other side. I would love your guys' opinions on what I'm saying in your words too.
No, I think that exactly what you said is what happened in the crash, right? I mean, lead flow went down, and we changed our process. We became much more thoughtful. I mean, we are in development. There's always some urgency, but we really wanted to make sure that our candidates had the time and the resources to make a really excellent business decision. And what we saw was, did we do less deals? Yeah, we did, but we had better deals. And it turns in, we're fortunate to be royalty sufficient. And what it did was it increased the royalty flow, and it increased our, as you said, exit numbers are stronger. Franchisee satisfaction went up, and getting the right people into the brand really made a huge difference. AUVs went way up. So it's really no different than the approach that we implemented at that reset.
Brian, same to you. Thoughts around some of that?
Yeah, well, the first thing I want to say is that when I said understanding with a side of urgency, I don't want anyone to confuse it with different expectations as far as qualifications for a candidate. That's not going to change. It's our job to have the process, like you said, Nick, to make sure we understand those that are legitimate franchise partners, those that are qualified, have the financials and everything else. We have a program or a term we like to use called the 90-10. And before a candidate will be invited to a discovery day, are they 90-10 eligible? Meaning, are they 90% of the way there with their decision? Territory's been defined, financing's been discussed and nearly approved, spouse is on board, they have the free time, all the things that we're looking for before we're going to invite a candidate to discovery day. And then the 10 side of that is, are they ready to sign an agreement and fund it within 10 days? Those expectations are still going to be there at the discovery day point. We may have more understanding on the front end of the process as far as, let's schedule a couple of calls a week. We might be willing to extend that out, or to wait to move into that discovery day process until they figured out some things personally. But we are still going to have the same expectations. And then the question comes up, well, you're doing virtual discovery days now, so why not just invite candidates even prior to the 90-10 eligibility? And we don't want to do that, or we won't do that. If we invite you to a discovery day, virtual or in person, we're going to want to be sure that that candidate is ready to move forward. So I guess my advice would be, have some understanding as far as the timeline is concerned, but don't change any of your expectations as it comes to the qualifications of a franchise partner.
I love the 90-10. May I borrow that?
It's yours. Yeah, the best form of flattery.
Yeah, it's the same approach that we take. They've done everything. They've done their validation. They've gone through the FDD. They've done their business plan. They've had the conversation with our COO and ops team. All of that's done, which is why we have nearly 100% conversion of, we call it meet the flock day to versus discovery day, of course, but to a signed deal. So we make sure they're ready to go. They're ready to make a decision before we spend all that time and all of their time to have that actual meet the flock day / discovery day. So the same idea.
Guys, if I could drive on this topic, and and I appreciate driving off of what Ryan said about 90-10. And then, Paul, you said something that's interesting. You said in 08, I think some of the words you used is to make sure candidates had the time and resources, and the term I love, to make an excellent decision, right? So in your mind, what are some of those tools or information that when you talk about giving them resources for that decision, and are some of those resources changing now, post-COVID, or as we go through this? Are you changing those decision-making tools?
I think that there will be certain things that we'll dive deeper into and we'll put more priority on, but the tools themselves, I don't think will change. It's the risk tolerance, the likelihood that something could go wrong, and how do you respond, the leadership qualities. Those are those things that we really need a lot of intense conversations. They need to speak to a lot of existing franchisees. I mean, we won't even disclose until they've gone through our full franchise business review survey, and then have a long conversation about that. Then we disclose, but they've got to do that. The business plan, understand what the risks are. I mean, so we use a personality profiling tool that it's not a screen, but it's a really good tool to have deeper dive into conversations about where they're going to need extra learning. In many cases, they'll end the COO call and say, yes, you're invited to meet the flock day, but you need to do research on this. You need to show us that you're interested in doing additional learning on this topic or that topic, so that we really prepare them. And I think it will just be more and more intense in some levels. And I mean, right now, we're not, we don't know what's going to happen. We're not signing deals right now, right? I mean, we have a couple of transfers that were scheduled for April 1st, and in collaboration with the buyer, the seller, and us, we're pushing those off until June. We want to see what's going to happen as we come out. And June may be too early. But we had a franchisee in March who got funding, and I just said, congratulations, but I'm not taking your money. I'm not taking your signed agreement. I'm not signing it on my end. I know you, and things changed between now and then, and he called and thanked me. I mean, we're not comfortable doing that right now. We have to see how this is going to play out, and we don't know right now. I think we can all say the only thing that any of us can say with certainty is that it's an uncertain future for everyone. We need to see how this plays out before we do any more deals. And every brand is different. So I also don't want to have, this is the other thing I said this last week when I was on, there's no judgment. Every brand is different. So you have to make decisions that work for you, and no one should shame you for, I'm not in a position of judgment.
If we were to go back, I don't know, let's call it IFA, let's call it the turn of the year. We still had plenty of CEOs. Paul, obviously, not yours. You've been at the company for a very long time, but plenty of CEOs that would say, I want 40 deals this year, and the question would come back, well, how many did you do last year? And we did 10. And you said, okay, so the budget is 4 times, and they would say, no, the budget is the same. And so the expectations started skyrocketing. Yet I'm not sure the amount of buyers ever did. I think the number of buyers in this pool may have stayed pretty much the same, if not even a little bit less, given how strong employment was. So now, when we get the other side of this, Paul, you're saying, like, I'm going to pass up candidates right now because it's the right thing to do. That means the growth goals of this year are probably already derailed to some extent. You guys, both of you, do you feel like pressures change, that it gets back to either just doing the right deals, or these growth goals are going to be shifted drastically? If we're talking about a mid-year re-entry back into not even normal, like 10% normal change from a goal standpoint for this year? And how do you guys think brands can adapt for that?
Yeah, good question. I'll start. The only thing I know for sure is, and I can only talk about FastLane brands, but the only thing I know for sure is second quarter is going to be affected negatively. I don't know what's going to happen in third quarter. I'm hearing that pipelines are increasing for some of our lead sources. And so who knows what comes under the tail end of this as far as people being laid off and what they're looking for next. The question you asked previously, as far as decision making, I believe that perspective is an important part of understanding where a candidate, the perspective a candidate has is an important part of understanding what their process should look like and if they should move forward with a franchise. I'm a big believer in managing on faith over fear. And I also look at some of the historics that we've seen in the marketplace. I mean, in 2008 and 9, people were saying, the future is going to be very bleak. And then we went on the next 12 years were the biggest bull run we've ever seen. Right. I think that this is mostly managed off of emotion. This market downturn is managed off of emotion, not necessarily downturn market fundamentals. I mean, you look at what's going on over in China, they're in day 65 and we're on day 26 and 100% of the Apple stores are open over there, right? Schools are starting to open, temporary hospitals are down, travel is kicking back up, the market is returning. And we saw nearly a 40% drop in our stock market in less than 3 weeks. When we talked about the 2008, we saw that type of drop over a year and a half. And so it's not based on market fundamentals. It's based on the virus and it's based on emotion. And if we can kick this, if this social distancing works, if we find a vaccine, whatever it is that's next, even if we just follow the trends that we're seeing on the other side of the world, I think the market could rebound and who knows what third quarter or fourth quarter looks like. So we're spending a lot of time managing perspective of our team, saying, let's look at what's going on the other side of the world. Let's apply that to our own situation, give the candidate a little bit more time. Maybe they're not ready to make the decision right now, and maybe that's the right thing, but let's be very prepared because we expect a bounce back to happen quickly. So let's be very prepared with the exploration and with the funding. And when that candidate feels comfortable and when the brand feels comfortable, let's be ready to pull the trigger.
You know what, Ryan, I think there's so much energy built into that Q4 coming up and hopefully even Q3. So aside from issues that I think all good franchisors are focused on, which is supporting franchisees and doing what they're supposed to, like wild birds, are you speaking with your franchise brands about internal housekeeping measures, things that they should be pushing on now to move that needle and really gap other brands when they come out of this?
What we're telling our brands right now is the most important thing they can do is make sure that their existing franchise partners are satisfied with the leadership they're getting from the franchisor, right? I think there's going to be a brand new validation question that's going to start getting asked, and it's going to be a very important one. And that's the candidate is going to say to that franchisee, how did your franchisor respond during COVID? And what we want all of our franchisees to say is, man, were we impressed with the leadership we saw from our franchisor? Whether it was just additional communication, whether it was some sort of financial incentive, which I am not saying that's right for every franchise. I'd actually say that's probably not the right thing to go and do right now. But we just want to see the leadership from our franchisors to the franchisees, because we know that franchisee is going to be on a validation call. And what we want them to say is, not only am I happy with the brand prior to COVID, but I am very impressed with the leadership that we got from our brand during COVID.
Yeah, I think that's, Nick talks about, or we were, talking about that, how we responded to COVID-19 tab on every franchise sales page, right? And I think that's a big story. But I wonder if franchisors, in addition to providing that support and having the franchisees that can validate it, I wonder, while we're in the heart of the storm, if they're taking the time to document it and really tell that new part of that brand story. And I think that could be a big opportunity for brands right now to actually, while all the storm is happening, to pause and, all of a sudden that leadership team video to franchisees and the public may become the best sales tool. Or Nick and I had a conversation with a Sylvan Learning franchisee that just blew me away. I mean, we were done with the conversation. I'm like, this would be my franchise sales ad for the rest of the year. So I wonder if now's the time to start capturing that also.
I think it is. I think you need to document everything you're doing. mean, we just did a 1851 interview on what we're doing right now, so we can use that and thoughtfully and carefully and massage that to share it with candidates so they know what we're doing, not use it as a sales tool, but use it as an educational tool.
Paul, and when you say thoughtfully, Paul, like that's critical, because I don't think telling that story after we're out of this is the same as telling it now. Because the stresses and your whole mindset is so different now. And I mean, I think that's powerful stuff.
Yeah, I think it is, and sharing with them like some of the changes, some of the bobbing and weaving and pivoting that we're doing right now on how to help our franchisees and how they're helping their customers. So we have on our intranet, we're doing a share the joy section so that they can post pictures and videos and customer comments on here's what they did above and beyond to get me it may seem silly, but to get my mealworms, to get my bird feeders filled, to this is what they have done extra to help the installs. Those kind of stories are very important, and they have to come from the heart. They have to be authentic, and they have to, obviously reflect what your brand does and what your mission and vision and paying extra special attention to your values. But it's going to make a difference. It is going to make a difference, and I think Ryan is absolutely 100% spot on. Is that validation question? How did your franchisor react and support you? So, just providing all these different marketing materials. My marketing team has just been amazing of just pivoting on every single thing and working with our hobby and nature education department to create these, the name escapes me, but these videos, these nature moment videos to give to our franchisees to share in social media and email and on their individual their individual websites, to take a pause from the insanity of this day and hear just some birds eating bird feed and just those smiling moments of birds coming in and building nests and bluebirds hatching and chickadees hatching. Those are the kind of things that are going to give your customers a reprieve and enjoy the joy. And that's what we're all about, is sharing the joy of nature and making sure that content and templated materials are available to your store owners immediately. Best practices on no contact curbside delivery so that they stay safe and their customers stay safe. Those are the kind of stories that need to be told.
I mean, this is such an emotional situation, Ryan. I love your point about that. This isn't really a traditional downturn. It's an emotional force swing that is happening. And on the other side, I would imagine that some of the things, Paul, that you're talking about, the emotional side is actually going to keep people in business longer, to give them hope, to give them strength to keep battling through and managing their cash as best as possible to get to the other side of this, because there will be some truths, like cash will dry up if this continues on too far. But sometimes that emotional side of belief that there's going to be a percentage of franchisees that believe so heavily in themselves that they can accomplish anything as a franchise owner, that belief alone will, when they hit rock bottom, if this stretches out too far, how they stay at rock bottom until they got a shot to come back out. And like that mindset ends up being so valuable. But there's so much emotion. There's emotion on the panic side. There's emotion on the health side. There's emotional impact on the financial side. And there's the emotional impact on the political side in the midst of a presidential election. So it is there's chaos.
There is, but you said something the first time we've mentioned it. I think also giving the resources to your franchisees on how to preserve liquidity and gain liquidity is so important. I've spent most of the time here working with our franchisees on dealing with landlords to get rent deferment and or reduction, managing through both of the big loan programs that are out there, and answering the questions that we can, and gathering intel to then share with them, and providing them. Last week we had a webinar with one of our financing partners, BoFly, to get them in the queue now and start, if they need documentation, if they need information that we have, sending it to them and just being on top of it. And we actually going back to the well for the the recession, pulling all of that material out, all of those financial plans, how to redo your projections, and where you can start constraining expense, or restricting expenses where you can't, where you shouldn't be restricting expenses, and giving them help and going back through all of that data to say, here are the franchisees that we think, and we have 345 of them, but our amazing operations team focusing on the those that we think are at the highest risk, and what can we do extra to help them prepare for the upcoming months. I think it's really, really important.
Yeah, Nick, if I could connect the dots here too, on my comment back to franchisor supporting franchisees, what a great thing Paul just said there, right? He's talking about new programs are put in place, new resources they're pushing out, identifying what franchisees need and what position they may be in. And to your point, it's very emotional, right? And so earlier when I said franchisor supporting the franchisees, I think too many times people think that means financially, or a cut in costs, or I don't know. And that's not the case. In fact, most franchisors are not in a position to do that. They're worried about their own cash flow like their franchisees are. What is good leadership and what we want our franchisees to see is this over communication. What is within our means? What do we know? How do we relay that messaging back to the franchisees? What a great opportunity to lean on core values. A core value of FastLanes is have each other's back. So when this came out and the team's asking, hey, what does this mean? I said, FastLane's got your back. We're a family, right? We're more determined than ever. This is what I was trying to say when my mic was out. We are more determined than ever right now to make sure that we are going to be able to do business as usual. And I hope the government program comes through, but you better bet that I've gone back into entrepreneur mode where I'm looking at costs and what do we need to cover those costs, and what happens if we don't cover those costs. And just like when we all were entrepreneurs in the very beginning, thinking about where our budgets and our people, and those messages are transparent to the team. There's going to be no surprises. They're going to know what I know. They're going to know what we need to go out and accomplish together. So I just think it all kind of ties together. There's a lot of emotion. The franchisees are looking for, they have a lot of emotion. They're looking for leadership. There's ways to provide leadership, and it's not always financially. A lot of times it's just through communication.
I think it's also important to remember your team too, because you're not, as a leader, you're not just supporting your franchisees, you're also supporting your internal franchise support center team, and making sure that those people are well taken care of, making sure that you're recognizing the wins, making sure that you're propping them up in the losses. We made a big decision. Our COO, she's not much of an order giver, but she ordered all of us to take the weekend off to recharge. We shared that with our system, and they embraced it and said, we need you at top fighting condition. And you can't do that if you're exhausted. You can't be sending emails at 3 a.m. from the onboarding team of our online store. You can't do that and stay on top of your game. So we took the weekend off, and I was hesitant and I was anxious, and I followed the rules because this is public, right? That's what I'm supposed to say, is I followed those rules completely. But it was a big help, and it meant a lot to the team internally to keep them at top fighting condition.
What I'm every conversation, and for us at our law firm, one of the biggest things we ever did was a 2-day away from the office session where we focused on our core values, our unique selling proposition, and it took about, I think, 3 years for us really to get to our core values, live them. We have one of our metrics is in our traction meetings, if we haven't on our quarterly traction meeting, how we lived up to the core values, and if we dropped the ball, right? And it matters. And what blows me away every conversation, and it goes to a good leadership, Ryan and Paul, both of you are mentioning, as we're having this conversation, mission, vision, values, leadership validation. And Paul, you're talking about team, Ryan's talking about leadership. it just blows me away that good leaders, good brands are going to fall back on this. And for the brands that are listening, especially the emerging, one of the things I'd recommend is if you don't have team values, those core value downs, and maybe now's the time to take that step back and really focus on it, because it's like that safety mechanism. When all hell breaks loose, that's the redundant system we go back to. And I mean, it's every conversation, and you guys are just hitting on every cylinder with those points, every one of them.
Oh yeah, I mean, when you create something like that, it's created specifically for times like this. You need a foundation to lean back against, and if it's not defined, it's harder to do. When they're defined and you live them, and there's no surprises for your team as to what those values are and what it means for them, it makes it a lot easier to get through times like these.
Brian, I never thought in my life. I mean, I did over years, but years ago, it's like, hey, let's just run the business. Like, what's this fluffy stuff and values and stuff? And over the past 5 years, it's become everything to our team and to myself. And it really is a compass. It's amazing.
Yeah.
It's amazing.
I think it helps you navigate. I mean, look, businesses all over the world are having to make really tough decisions when it comes to layoffs or furloughs too. That when you look at your core values, most likely there's going to be a percentage that on your team, your franchisees, your partners who don't follow them. And, this gives you also guiding principles as a leader to understand, like, the people that walk into your organization every day and follow them as best as they know how to, those people need to be elevated. And sometimes you're going to have to make decisions that you're going to lay off the ones that don't to protect the ones that do. It turns into such a guiding principle that maybe it's overlooked in a time where, some organizations are really stressed for more labor. So they're like, all right, this person doesn't follow that core value exactly. We're going to give a concession there just because we need the labor. But in a time like this, I think all business organizations have to remind those that may not be following the core values, hey, just so you know, this is what's going to get us through this. So here's my expectations. And if they don't, and you get to the point in your business where you're trying to preserve cash on the other side, then that makes the decision fairly easy. Why don't we jump into, we have two questions that are sitting here. Let's go to Michelle's first. Michelle asks, how are you preparing to talk to candidates about this COVID-19 impact on your business and the franchisees? Most brands have spent the last few years getting more granular with the FDD and financials, item 19s. How will this impact your process and conversation? Paul, you want to take a first?
Yeah, I think we've talked a little bit about preparing to talk to candidates about the impact and franchisees and validation and preparing. I think Brian said, get these stories out there, get them out now, do the documentation, which I think is brilliant. We have gotten away, speaking of item 19 in our FDD, a lot more granular and have a very long item 19 with information on top line, bottom line, a lot of bottom line information, owner's discretionary cash flow, and some really important customer data so that a candidate can really look at all three of those at the same time. And I know that what we will have to do, we will be required, or I'm assuming that we will be required to put language in like we did after the Great Recession about the economic downturn and how that would affect it. And so that will probably go into all of our FDDs at some point within the next few months, I would imagine. I don't know. What do I know? But at least next year, they'll make us put it in there. That's for sure. And we've already got a lot of that language in about, the risk factors. But I think it will get granular. And I think that we will have to break down some information by quarter, honestly, so that candidates can see what this impact was from a quarterly standpoint. I mean, because we still have so many of our stores operational, doing, obviously the online fulfillment and closed showrooms, but curbside pickup, we're still doing, we're doing okay, and a Bless all you people out there that feed the birds. But I think that will be something we will need to consider doing to make it, to break it down this year, especially, and potentially even quarterly data for next year. And we plan on doing a mid-year amendment, and I think we'll have to include some of that information in there too. With advice
Ryan,
from council.
I think I like that mid-year amendment. I mean, that's one way to really kind of get into the real story of what happened. I think for us, it's going to be pretty much business as usual, except for maybe one difference, and that's just transparency in what we don't know, right? If we're representing brands that are affected by this, and the market starts to rebound and the candidate's going through at the time that they're rebounding, we're just going to be transparent in the fact that we don't know what that U is going to look like. You guys are probably all familiar with the concept, right? We start up here, and then as business starts to decline, we know that we're going to hit this flat point. What we don't know necessarily is when it's going to go back up or how quickly it's going to go back up. So I think we would just end up being transparent with candidates as to, yes, we were affected during the COVID shutdown, and we don't know what it's going to look like when it comes back, but here's what it looked like prior. Our perspective is that the market is going to come back, that this is based on emotion and it's coming back, but to be completely transparent, we don't know how long that'll take. What else can you say, right? I mean, unless you have knowledge or a crystal ball as to what's going to happen, transparency of you're not 100% sure as to what the future holds is probably the best bet.
You know, and this issue comes up often, and I think you guys hit the nail on the head, because I think Paul's 100% correct, right? Next year, quarterly data, especially certain, is going to provide, you know, at least an explanation and story where you could break this down. And for certain brands on certain item 19s, we are planning for mid-year amendments. Of course, you know, we're trying to see what's going to happen with state registrations and that impact. But for certain brands and certain item 19s, it could actually be a compelling reason to do it mid-year, get that data out there. But I think, though, Ryan, you're right. We are going to go back up. Yeah. And everyone is going to view this as a period in time. It's going to be static historical data at a certain point. And unless our country disappears, which it's not, we could expect normal patterns to go back up, I think. And I also think smarter brands are going to have more opportunity. We've been discussing, you know, unfortunately, there will be opportunity, whether it's in the real estate space, you know, lower rent, you know, different metrics and stuff. So, you know, once we hit that upside, I think there's a lot of positive to item 19 and telling another story.
And I think the country is starting to realize that. I mean, what has it been, 4 or 5 days since 3.3 million, the job numbers came out, there's 3.3 million that applied for unemployment. What's happened in the market since then? I think we have been positive in the market every day since 3.3 million people applied for unemployment. So it's almost as if the country is starting to kind of level out and understand that this isn't forever. We saw that immediate drop. People kind of got fearful there for a bit. Now we're starting to become a little bit more maintained, and I think that's going to happen, but nobody knows how quick it'll happen.
No, but Ryan, that's key though, right? Because look, I'm in New Jersey, New York City area, so we're in the heart of it right now. And I don't want this wishful thinking, but I think as a nation, or at least entrepreneurs, come end of April, we're all ready for a fight, and the fight getting everything back on track and growing these businesses. So look, I think we're planning for the worst, although I don't know, every week it gets a little more progressively worse, right? But if for some reason by the end of April, we could have some positive upside, numbers coming down or containment, I think it could be a strong acceleration point back up.
Yeah, but I think I agree with you. So I shouldn't say but, and we all have to realize that we're going to come out of this in a very different space. So, yeah. I mean, I think that there is going to be, I'm anticipating that curbside no contact pickup may be something that retailers have to get their heads around, because people are going to be anxious and anxious about contact. Anybody who is in, at least in our space in retail, who doesn't have a online option will have one. They'll figure that out very, very quickly. And we need to be prepared also from a supply chain that there's going to be a huge demand when people can get back out. And for those people who do feel comfortable, at least shopping in a retail store, they will want something that is joyful and something that means a lot with them. And, you know, God knows, I don't want to capitalize on this. This is a horrible, horrible thing. But during the recession, when people really pulled back on some of their big expenditures, they still fed their birds. They still bought bird feeding products and something that gave them joy, and like gardening too, and stay at home. Staycations are going to be a big thing. So we will see some of that coming out of it, and we need to be prepared to fulfill that pent-up need.
I agree, Paul. I think business is going to be done differently. And, you know, if I had a guess on the big losers, and I'm in this category, so it's going to be landlords, you know, both retail and commercial, right? Because right now what's happening is everybody's going back saying, hey, defer some of my payments. Others are potentially going to go out of business. And when the new ones come in, they're going to want a lower rate. So what was historically high rates that landlords were getting and locking people into 5-10-year leases are now going to correct themselves. Yep. And on the commercial side of things, I mean, nobody has been in the FastLane office for weeks now, right? I'm a big believer in as many people that are here in Omaha, that we go into the office, we collaborate, we get an opportunity to see each other. But I'm starting to realize that we're doing business just fine virtually as well. So I think there's plenty of companies around the country that are going to realize virtual offices can be just as effective, and both landlords on the commercial and the retail side are going to start to feel it.
You know, I've totally underestimated the last part of that. So I'm looking at everything franchisor, franchisee business, but yeah, like I agree, Ryan. To me, everything, like having our team together matters so much. Culture and nothing will ever replace that. I send them photos of me in the office alone all day, but it is going to change the workspace completely. Mm-hmm. It really, it's made me think twice about it now, when I never thought I would consider remote and all these other things.
Yep, absolutely.
My partner works from home, and I just used to tease him relentlessly about, oh, what a cush job. Why didn't you get the laundry done? Now I'm like, oh my gosh, this working from home is hard. You are on it all the time. You just never stop. And I'm exhausted by it. And I realize part of it is the conditions in the world that we're dealing with. But he's like, so, see, I'm telling you? Yeah. Lower your voice.
Yeah, you never realize, like, it's actually a break to get in a car and drive somewhere and stuff. So
yeah, exactly. Or you go out into the office and you chit chat with somebody. There's oftentimes professional content there, but you're working at home. You're just working.
Let's hit Matt's question before we go into final comments. Matt says, I've been worrying, can't be feeling about retirement savings, etc. On one hand, it's great. It's a great time to be diversifying, but with markets tumbling, there may be less to draw from. Post-COVID-19, when the market rebounds, that might be less of an issue. Just general thoughts on that, guys?
Yeah, I'll kick it off. I mean, this is where we lean on our funding partners, right? Of course, candidates are coming in saying, my 401k just turned into a 201k. I heard that joke earlier today, right? And they're concerned about it. I was going to use a rollover, but we find that we have very professional funding partners. And if we just get a candidate on the phone with them, there's other options, right? Whether there's options we haven't used in a long time because the rollovers and the SBA loans have been so easy, but borrowing against your stock portfolio, if there's anything there, using personal cash, and then having the ability to pay yourself back once your 401k bounces back, and you can do the rollover at a later date and pay yourself back, amongst many other options. And again, to me, it all goes back to that perspective. I mean, anybody that's in a 401k, hopefully they're if they're on the later end where they're going to need that 401k, it might be more sensitive. But most individuals that are thinking about opening a business are probably got quite a bit of time before they're ever going to want to tap into that 401k. So don't get so caught up in what the value is and how much you're borrowing against it. I'd say right now, while I'm a big believer in the market, I'm also a big believer in betting in yourself. So if you need to pull some of those funds out in whatever way you get it, to bet yourself and control your destiny, business ownership is the most powerful thing in the country. It's something that I teach my kids every day because I know the meaning that it's had on my life. So I'm going to focus more on the long-term dynamics of betting on myself than maybe the short-term of pulling out, from a 401k that's down or finding other funding options.
I would ditto that. And I think what you said in the beginning is you've got great financing partners. If brands don't have great financing partners, get them now. And getting on the SBA registry is so important. We've been on that for years and years and years, but you need to have those. We talked about foundations earlier, foundations of values. This is foundations of business, that you just need to have these things in place as early as you possibly can as a franchise brand, so that you can then be prepared to leap off of that when the time comes. And those partnerships and the relationships that you're building with your funding partners are so important. And there's so many good ones out there that are really reputable. We're very lucky in the franchise space.
So as we make the final turn, final thoughts, Charles, I'll start with you and then I'll work my way around. Charles, what final thoughts?
Yeah, you know, all the conversations to me point to leadership. There's a paradigm shift I'm seeing for sure. The good franchisors are going to gain traction on the other side of the recovery. The ones that don't have their brand, their leadership, their value proposition, you know, focus on AUVs, satisfaction, all the things Paul's mentioning, they're not going to survive. So I think there's definitely an opportunity. I love the pattern, at least potentially, of, hey, even if lead flow is down, everyone's reporting higher quality. So, you know, getting back to what Ryan's focus, you know, if we get to the other side of this chart, if we get there quickly, I think there's some good opportunities, certainly for brands like Wild Birds and brands that Ryan's representing.
Paul, final thoughts?
Just, this is a time for collaboration. This kind of thing that you're doing right here is so important. It's a time to have an open mind, and just tap into your lifelong learning strategy. And at the same time, it's also a time for hyper communication, which doesn't just mean hyper talking, it means hyper listening. And
Ryan?
Yeah, so I hope this doesn't sound insensitive, because it's not what it's meant to be. The other day I was listening on a webinar with Robert Crisanti, IFA president, and he said there's always sun behind the clouds, right? And so, of course, there's a lot of people that are hurting out there right now because they don't know what the future holds and they've just been laid off. But if you think a little bit about what the sun behind the clouds is, that's going to be an opportunity for many, many people to explore business ownership. And if you're a franchise business and you're thinking about the future, you know, we focused a lot today on what do we do now? How do we communicate? How do we prepare people? But we're doing it to get to the sunshine behind the clouds. And when we get there, we are going to have more mid-level and experienced executives that are looking at business ownership. They're going to come off of a time where they just got to control their time. Even those people working from home, right? I'm checking emails while I'm opening personal mail. I mean, people start to understand what the flexibility of controlling their schedule is, and that might pique interest into what would this be like long term. We're starting to see government programs to offer up funding that's never been available, with lower closing costs, with lower interest rates. So when you start to look at what that could potentially look like behind the clouds, it may be the biggest opportunity franchising has seen in many, many years. And again, I don't want that to come off as insensitive, because we are in a very hard time for a lot of people right now. But if we just forecast a little bit of what that turns into, that could be a big opportunity for franchisors, and it could be a big opportunity for many people that are going through hard times now to eventually own their own business. And who knows what that holds for them.
Ryan, I don't think that's insensitive at all. I think that is an essential mindset that we all need to have.
Thank you.
Yeah, you know, in franchising, forever we've been chasing unicorns. At every conference, it's like, what's new in franchise development? And the answer is nothing. It's the businesses that do the fundamentals continue to win. But when you're chasing unicorns, you're chasing an unknown. And it's interesting because right now in our world, this is an unknown. We don't know much about the disease, not enough to have a cure. We don't know the other side of this. We can have predictability based on watching what's happened in Italy, to have some sort of mindset or opinion that, you know, around April 5th or 6th, we might hit the hump and start going a decrease of, new cases by day. But the reality is, all we're doing right now is still chasing unicorns. So it's always been fascinating to me that in franchising, we've gotten so comfortable with the idea of not knowing where our next deal is going to come from, but having faith that there is going to be another deal that comes into our franchise organizations. And if us as human beings can rely on the fact that we already got people with a lot of unknowns, because our industry is full of them, then it changes the mindset as we go into these next stages of whatever this means. We don't know the end of it. We don't know what happens in the markets. We don't know what happens to net worth. We don't know what happens to health. There's too many unknowns. But the reality is, because we are entrepreneurs and because we have a belief that there will be a tomorrow, that there is sun behind the clouds, that's all it's going to take for us to get to this next level. It may not look like it did yesterday or a few months ago. Business might be completely wrecked on the way that we used to know how things worked, but maybe that's not a bad thing. And for those of us that, and all of us are starting to look at opportunity, not insensitive opportunity, but opportunity period, then we're going to live to have another day, and our brands are going to live to have another day. And the franchisees that Paul's advice on mindset and Ryan's outlook on being true entrepreneurs or business owners, those are going to be the ones that have an interesting story to tell on the other side of this. But the headline is this: none of us are going to forget this moment for the rest of our lives. This is a big impact. And I think if you take a second just to breathe that in and think about it, but this is a point in our lives that we'll be talking about with our families and our friends for the rest of our lives. And now how we recover out of it, and the stories that we can talk about, how we had people's backs and how we navigated this awful waves that are hitting our ship. And we're gonna have something on the other side of this. And I'm blessed to have people like the two of you join Charles and I and having these conversations, because with so many unknowns, all we're trying to do is rely on each other's mouths and opinions and emotions and shoulders. Say, God, let's figure this out. It's going to be painful, but let's figure it out. And I appreciate all of you spending some time talking to us today and our audience. I know they're grateful for it too. And I wish everybody, Paul, Ryan, Charles, the best of luck as we continue to navigate this and the conversations that we have. So thank you so much for joining us. Appreciate it. Continue the conversation on Facebook. If any of you have more questions for Ryan and Paul, please put them in the chat, and I'll make sure that they get over to them. But again, appreciate the time, guys.
Thank you, guys. Appreciate it.
Thank you so much. Thanks for the opportunity. All right.
Thanks, guys.
Be well, everyone.